All right, we should be live. What's up, chat? Can we do the quick audio check? Let me know if everything's fine. What's up, Eric? What's up, Rajuk? Good evening. Good evening. What's up, Mowgli? Good to see you, man. I'm doing good. I'm doing good. Like the last 2 weeks of the year, right? So, trying to reduce the activity. To be honest. Like, probably got like 1 more week left where I'm like gonna be looking for trades, and then I'm gonna close up shop. What's up, Daytona? Good to see you, man. What's up, Dave? What's up, Nabula? Raptor? I'm back, man. I'm back. You missed me. What? Why did you miss me, G? It's been a week, right? Only been a week. Good evening, man. Let's take a look at some charts. So we got everything up and running here. I'm gonna give this a minute and then we're kicking it off. I want today's stream to go, straight to the point. We're gonna be doing the prep and then we're gonna be doing the Q&A, similar to last time. Last week has provided some excellent trades, to be honest. So I hope you guys enjoyed that as well, based on the last week's review. And this week is gonna be super interesting as well. I do have some levels that I want to be taking some trades at, with a core focus on TPO and VWAP, obviously. Indeed, the 4-week composite, indeed. So that's gonna be the main driver. You can already see it on my charts there, 4-week, right? That's gonna be, it's gonna be the most important thing this week, in my opinion. What's up, Tomster? Good to see you, man. So 1 more minute left and then we kick it off. You 5x your account based on the teaching on your live stream. This is good to hear, man. I'm happy for that. Like, I mean, kudos go to you, right? I only outlaid the plan for the week ahead. You're the one who was executing the trades. So I just think it helps to have like a proper plan in place. Running view apps like that. Okay. So let's get this in. Review. First off, what is up, everybody? Good to see that we got the gang with us again today. We're going to be taking a closer look at Bitcoin. We're going to be using VWAP, TPO, price action, all the goodies to determine what the next best trades are for this week ahead. I'm going to cover the entire prep in one go. If you have questions, let me know in the chat, because I do want to have an uninterrupted stream. So I'm going to be doing the prep first. And then when the prep is done, we're going to go over the Q&As, answer questions, so everybody gets their dedicated time. Mainly because if people want to watch the recording, they can quickly see all of the prep, then get the prep done. And then if they have interest in watching the Q&A, they can watch their Q&A, okay? So sit back, get your drink, relax, enjoy, and let's get this thing going. And we're going to be starting off with the longer-term VWAPs. And I'm going to be opening up this chart right away. Longer term VWAPs, if you've got the yearly time frame here, I think the key takeaway that we need to have heading into this week or into the end of the year is that we will have new previous year value within 2 weeks, right? We're now rotational within the developing year value. We can see its relevance here. We weren't able to accept back above the developing year value high. We then got the rotation lower towards developing year VWAP. Some short-term interaction there before the acceptance below, and we got the full reversion lower into the developing year value, where we are currently trading. Doesn't really matter to me where we are trading heading into the new year. What I do know is that within 2 weeks, we will have new previous year value low, and we will have new previous year VWAP. So, if we're trading within the middle of value at that point in time, this is going to be high time frame support, and this is going to be high time frame resistance. We are simply rotational between these extremes. If the year opens up within value and we break below, I expect this to be a short-term low before we reject there, before continuation lower. Because yes, we're pinched between 2 yearly values. In that case, the duration is the same, but the recency is then more important. And the most recent yearly value is the one that we currently have. Okay, so developing year value low, high time frame, bullish line in the sand. If we're closing within developing year value, and then we've got the yearly VWAP here. That's going to be our bullish or our bearish line in the sand at around 100K. Now, if we're moving towards the quarterly, we've said that a couple of times already within the previous streams, but all Bitcoin is basically doing is It is rotational, not necessarily within previous quarter, but this is the value area extended from the quarter 2. We saw acceptance back within the quarterly value, right? Rejected to the quarterly value high there, got the rotation lower all the way into the quarter 2 value area low, which bar stepped in, was confluent with previous year value high at 81K-ish. And now we're just rotational within that quarter 2 value in the lower bands. But the fact that we didn't really tag into this quarter 2 VWAP is because we have a 4-week composite value high here based on TPO. I will show you guys that when we come to the TPO section. It's still a level of interest to me. So let's say that we end up sweeping these lows, form a low, and we go for the highs. I think that push higher is probably going to get capped by the quarter 2 VWAP, which is roughly around 97K. And as always, the quarter 2 value low is going to be a bullish line in the sand if we break below that monthly value. Speaking of the monthly, if we go towards monthly value, similar to the quarterly value, we can see that Bitcoin has been rotational within the lower half of that previous month value. We accepted back within previous month value, got the setup here, sweep of the lows, front running previous month value by a tick there, got the displacement higher, retest for a move back into the highs, where again, we're front running previous month VWAP mainly due to the composite that we're trading within based on the region TPO. Does this mean that I'm not going to be putting a lot of emphasis on previous month value area low? No, I'm actually going to be looking at previous month value low here heading into this week because the newer 4-week value low is confluent with the previous month value low there. It's also confluent with the developing year value area low. So if anything, this is going to be our short-term bullish line in the sand heading into next week. If Bitcoin tries to break below, fails to do that, I think we can look for higher targets, right? Potentially even into this previous month VWAP. So rotational until proven otherwise. If we're going to be taking a look at the weekly, all the weekly is really doing is rotational, right? We're trying to break away from value. 4-week composite up here, right? Getting rejected, slam back down, multiple high volume rejection bars to get into shorts, right? This was a short, that was a short. Then we had this retest of this high volume point of control here. Compression into previous week value high. This is where I tweeted about, if we're getting a spike up during New York, it's the one that you want to be fading. Then we got the move lower into previous week VWAP where we are currently consolidating here. The most important takeaway here is the confluence with the 30 rolling VWAP and the current previous week VWAP here. Is this going to be relevant heading into next week? Next week, we will have new previous week value low right there. New previous week VWAP right there. New previous week value high right there. So this is going to be, a simple short-term range that we can trade. As I've said at the beginning of the stream, we're reaching the end of the year, which is why I'm going to be putting more focus on A+ trades, meaning I have more, I'm going to be putting more focus on this previous week VWAP that we'll have upcoming. That's mainly because it's confluent with the 4-week point of control. So let's quickly write everything out. Right here, we've got the yearly. The yearly has developing year value area low, confluence with previous month value area low. Like that. The quarterly is rotational within a lower half quarter 2 value. Then we have the monthly, which is rotational within lower half previous month value. And we've got previous month value low confluence with developing year value low. So short-term bullish line in the sand. Take a look at the weekly. We are rotational within previous week value. And then we have previous week VWAP, short-term bear line in the sand, as it is confluence with the 4-week point of control. Rolling VWAPs. Let's go towards this chart right here. Let's open up the rolling VWAPs right there. Hide the drawings. During a range-bound condition like we have been having over these past couple of weeks, the importance of a rolling VWAP kind of becomes less and less the longer the range is, because rolling VWAPs are a great tool for a trading environment, and usually the first interactions with a rolling VWAP is the best one, right? Gives the most violent push away from it. That's what we saw here with the 30-day rolling VWAP. Second attempt, right? Smaller pullback. Then we broke above, and now we're just bracketing through that, right? So whilst I am aware of the 30-day rolling VWAP, it is not as important to me as it was back here with this first interaction. The yearly rolling VWAP is confluent with the yearly VWAP. This is our higher time frame bearish line in the sand. I cannot emphasize this enough. If there's a push away higher, right, it's still the bearish line in the sand. If we go back in time and we take a look at what we previously did, right, this is where we are currently at, in my opinion. Let's say that this is the low. This is that first push higher. We're now trading down here. So I'm not sure if we're getting like a deeper push or, you know, a sweep of the lows. But if we eventually retest that yearly rolling VWAP, this is going to be the make it or break it for Bitcoin. Because if we cannot accept above, we need to assume that we're getting an extension in that bear market. And Bitcoin entered the bear market as soon as we're trading below the yearly rolling VWAP, right? I can't make anything else of it. I still see people hoping about altcoins or whatever, right? It's, you know, all fun and games, but we are already in the bear market. The moment we lost the yearly rolling VWAP as support, and that's exactly what we have been doing here, right? Yearly rolling VWAP, breaking below. Maybe we do this, and then we go back up, right? And then if this ends up being a fill break above the yearly rolling VWAP, we can expect this to be another leg lower. If we accept above, then sure, I'll go with it. But until then, this is still a bearish line in the sand. The 90-day, not putting a lot of emphasis on that. I think the more time we spend down here, the more this will start to trade towards the yearly. And then short term, we have the 7-day. Do we have the 7-day? Yes. We've got the 7-day rolling VWAP, which is confluent with previous week VWAP as well. So you'll see what I mean when I put all the lipstick on the chart later on. But let's first write this out. 7-day confluence with new previous week VWAP. 30-day is confluent with current previous week VWAP. And then the 90 days, what we're not using. And then the yearly remains high time frame bear line in the sand. Okay. TPO. Most important thing heading into this week. Let's get rid of this. Let's reset the chart view. Reset all TPOs. In the previous stream, I mentioned the importance of this 3-week composite, right? Let me get rid of crosshair real quick. All right. So let's merge everything together. Start merge, stop merge there. 3-week composite. I want to have a rectangle like that to show the value area. Let's expand this. Okay. So the week opened up right here. Obviously, we will have our short-term rotations, right? We got the buys intraday. We can trade previous day value, but we should not lose sight of the bigger picture. And in this case, it was clearly the rotation within this 3-week value. So when we get a skinny move higher, like a thin move up, and we see short-term consolidation, there's no follow-through whatsoever. This was during FOMC, right? Then, I believe it was during FOMC, or maybe this was during FOMC. I can't really recall anymore. Either one of these. Either way, this is hard time frame resistance. So this is where we look for shorts. Same story here. This is where we look for shorts, and we're targeting the value area low, right? So we can already see the importance of that 3-week composite. Now, if I were to reset everything once more, if this week closes like that, right? Even if we close all the way down here, I don't really care because the main value is overlapping with the prior 3 weeks, meaning we can merge everything together to form a 4-week composite. Now, that 4-week composite is going to be between these values, like that. Let me lock this in here. So this is going to be a 4-week composite. So if we open up within the middle of value, this is resistance, right? If we're trading below the 4-week point of control, this is resistance, this is support. So if we're opening up, let's say that this becomes resistance, this depends on where we're trading. If we're trading above, this is support. If we're trading below, this is resistance. And then we have support. So we can trade this range and we can trade this range. But what I do want to mention here is that when there is a genuine breakaway from value, right, where there's enough time and space below or above, it's the one that you do not really want to be fading, because I think if we're breaking outside of a 4-week composite, it's going to be the trend for a while, right? So if we're accepting below a 4-week composite, we try to break back within and we reject, I think this is going to be taking us all the way down towards that low. And if we accept above, I think this is going to be taking us towards the yearly rolling VWAP maybe even, right? So if you want to hone down on your trading, if you want to put a little less time behind the desk, I would suggest to keep these values on your chart right here. and then base the trades off those areas, right? And that's what we're going to be going over in a bit. Now, besides that, I want you to take a look at the daily profiles here. On the daily, in terms of anomalies, the only real anomalies that stand out to me here is this naked point of control. We've got a naked point of control there, but that's essentially confluent with this poor high. And we have a poor high intraday with a single print above. So I think, you know, even if Bitcoin is bearish, if we're going to be getting a bearish week, we're likely getting an open. Then we take out the poor high into the single print, right? Form the high of the week there, and then we get the continuation lower into this naked point of control. Maybe that's something that we're getting early on in the week. If we're getting a bullish week, I expect this to trade lower into the point of control and then reclaim the open and go back into the single prints here, right? So the only thing that I really want to be aware of are poor high intraday, single prints, naked point of control. So let's write that out. TPO, 3-week value high, capped upside this week. We have a potential 4-week value. The value high, write these values on your chart: 94, 130, value area low, 87, 87, 460. These are going to be the high time frame support and resistance levels. Okay. We got naked point of control, 85, 9, 60. We got poor highs, 92, 660. Poor highs intraday, and we got single prints confluent with 4-week point of control. Okay. To summarize this everything, all eyes on the recent 4-week value, as the value area low is our bullish line in the sand, and the point of control is our bearish line in the sand. High time frame, Bitcoin remains in a bear market since we traded below the 365-day rolling VWAP. Don't buy any typos. There's going to be a lot. Which is also the reason why I am using this as my high time frame bearish invalidation. In terms of a bullish line in the sand, oh my gosh, I can't type. In the sand, should we trade into the lows, Bitcoin will have to hold above the previous year value area high, which is at 81.270. Also, write this down on your chart. So what is the narrative for me heading into this week? As I said before, let me get everything here. Like that. Let's get rid of rolling VWAPs. Like that. All right. So H4. The overall range that we are trading within is from this high towards that low, right? That's based on price action. If we're fine-tuning things based on volume, right? Based on time, based on TPO, like a bell curve, this is the 4-week value area high. It's been capping it to the tick, right? You could argue we've got the yearly open somewhere here, right? I mean, okay, I'm all ears for that, but we fine-tune it towards the 4-week value, and we can see it's way cleaner. So that caps upside. So we are simply rotational between the 4-week value area low and the 4-week value area high. So if we are going to be getting a sweep lower and we form a swing low in the form of maybe an H12 SFP, right? We get displacement higher. I want to be a buyer, and I think that we can target that 4-week point of control, right? That's straight one. Now, considering how this structure is looking, I am more leaning towards a revisit of range low. I just can't help to think about that. If I were to trade this on a 5-minute chart, right? I would think, okay, unable to reclaim range high, multiple failed attempts, right? Above a big level. I'm shorting this back into the low because, you know, it's just it's a simple range. But whenever we're talking about Bitcoin and people getting emotionally attached to it being valuable, right? We can just trade towards range low, can we, right? So all of a sudden it becomes like some taboo about, no, we cannot really trade back into the lows. But I personally think that if Bitcoin isn't able to reclaim the 4-week point of control, right? I think if it's bearish, we shouldn't revisit this, right? I think if we revisit this once more, we're going to be going straight towards 100K in my opinion. But the trades for me are either going to be a failed break below the 4-week value area low for a move back into this gap here, where the real test will be. Because if we form something like this, sweep, and we are unable to break above, I think this is just going to be a slow death here into this low, into the quarter 2 value low. And then if we accept back below here, right, we could target this low and potentially much lower. So super simple week. I want you guys to highlight these levels on your chart. The 4-week value high at 94,130, the 4-week point of control at 91,340, and then the 4-week value area low at 87,460. Because the range that we're trading within this week is this yellow box. And as long as you trade within the yellow box, right, we can trade this upper range. If we accept above, we can trade that upper range, right? If we accept above there, we can start targeting 100K. If we accept below, it's bearish. I think we're going to be putting a short-term low here. But if we reject at the 4-week value low, this is going to be going back towards range low. Okay. So to write out the narrative here, since we are in the final weeks of December, I am going to trim my daily activity and only focus on A+ trades. And in my opinion, those are at the value area low for longs and the point of control for shorts. Overall, considering recent structure, I am leaning towards more downside, but we'll take either side depending on the developments early on in the week, period. Meaning, if we have a failed break below the 4-week value area low, I will look for longs towards the 4-week and potentially 365-day rolling VWAP. Conversely, if we have a failed break above the 4-week value area high, I will look for shorts towards the 4-week value area low and potentially range low. There's going to be heaps of trades in between, but I want to paint the bigger picture here once more. This is the range for this week. Focus on the inability to close above the 4-week point of control, right? For shorts, for a move back towards the lows. Focus on a failed break below, followed by a reclaim for longs back towards the point of control. Besides those two trades, of course we can trade acceptance above, consolidation, failed break, continuation. At that point, I think we're getting like compression here, like that. And we're getting a pop higher to take out these highs into 100K, which is the ultimate bearish line in the sand, right? 365-day rolling VWAP. That's also a scenario. If you want to be aggressive and you see that we're trading below the 4-week value low, we get some sort of buying activity here at the quarter 2 value low, right? We try to break back above and we get slammed back down. Similar to what we did here and here and here, right? You can look for shorts for continuation lower into range low. But until these breaks from value happen, we are putting our focus on this structure here, where a sweep into this low is bullish and a sweep into this high is bearish. And until then, right, we're just chilling. I do not want you guys to trade anything here in the middle because it's shit. Considering how we've been chopping around, I would argue to focus on only the higher time frame values here, right? And then go from that point on. Is this clear for everybody? Let me write out the bullish and the bearish line in the sand, but let me know in the chat if everything is, you know, if we're all on the same page. Bullish line in the sand, short term is 4-week value area low, 87,460. Long-term bullish line ascent is previous year value area high, which is at 81,270. Then we have the bearish line ascent, short-term 4-week point of control, 91,340. And then we've got a long-term bearish line ascent, which is the 365-day rolling VWAP at 99,840. And that's it. Took us 30 minutes to do a weekly prep using VWAP, rolling VWAP, market profile, combining it everything, right? And then based on that, we now have the hypos for the week ahead. Are we all good? Let me catch up on the chat real quick. Yeah, the live streams are always recorded. You can catch all my live streams in the just on my YouTube channel, to be honest. Like, they're all recorded there. No, I don't. EST is asking if I look at CVDs at value. No, I don't look at CVDs whatsoever. For those of you who know me, know that I tend to keep it really simple. I like to, keep a level-headed approach, and I think, if you're getting too much into the nitty-gritty, like looking at divergences, stuff like that, I'm like, yeah, it's all about positioning, absorption, exhaustion, and whether that's going with a delta divergence doesn't really matter to me. Like, I just need to see a lot of people getting offside, to be honest. And that's it. On which time frame should we focus for a sweep or a close? So if we're talking about just a pure price action trader, right? If we're talking purely about PA, like, I would argue that looking for an H12 close, like, first off, like an H12 sweep into a level like we have right here. Let's see if this was a trade. I can't recall. I think it was. Start new. So right here, we've got an H12 sweep, right, into the quarter 2 value low, which is higher time frame support. Then if you go towards the hourly or a 30-minute time frame, what I need to see is I need to see displacement. I personally don't really put the structure breaks on the high or the low. I like to use the close. So if I see a candle close through the prior close from the prior opposing candle, it's a shifting condition for me. And at that point, right, you can target whatever you want. You can target this, you can target these highs, or you can target the contextual level, right, in terms of a 4-week value. So that was the trigger to jump in, get the invalidation below this low, and target liquidity here, and then into that 4-week value. If we were to get something along those lines at the current structures, it would mean that we're getting an H12 close, sweep this, H12, right, close, look for an hourly displacement above the opposing candle. At that point, the target becomes simple. It's this gap here confluent with the 4-week point of control. Conversely, if we leave this low intact, right, and we do the opposite of what I've just said, we're looking for an H12 sweep into that level, hourly displacement lower, and we could target these lows, right? These are higher time frame plays. For me personally, what I tend to, ease into the trade when I'm looking at order flow. I'm like, I want to see, a large amount of buyers or sellers getting offside, and then I can just fine tune my entry a bit more. However, if you want to have a bit more of a laid back approach, then that's definitely what I would suggest. I do not really use Bookmap, no, but I've been hearing good things about it. But let me make something clear. Stuff like heat maps, right, where you can see where the orders are within the books, or even the DOM itself on crypto, in my opinion, it's useless. It only adds, and it might not be really popular what I'm now saying, but I think heat maps, the DOM, stuff like that, it's good for equities, right? If you see a large order with equities, you know that, okay, they're actually going to be doing business at that level, right? Because they can't really spoof, or at least it's illegal within equities to spoof within the markets. With crypto, who cares, right? Somebody can just, like, for example, if you were looking for shorts here, let's say that during FOMC, this is such a super nice short there. But let's say that you shorted this spike up into the 4 week, right? We even had a high volume point of control there at the high right there. So you short here, invalidation there. You're targeting these clean lows, super clean trade, easy. So you're short. Now all of a sudden you're looking at something like Bookmap or I don't know which platform, but you're looking at resting orders, right? And you see, oh my gosh, suddenly there's 30 million on the bid here. You're like, bro, you know, they're gonna push this higher. And all this is really doing is it's fucking with your decision making, right? Because the trade is there. It's rejecting off a key contractual level here. The draw is there, right? Take the trade. But if you're focused too much on heat maps, on the DOM where you see all these orders getting pushed and pulled, right? It's too much noise, in my opinion, for the average trader, so to say, if you get what I mean. Because Ryan is, I agree with him. It's true. For equities, by all means, use it. For crypto, hell no, because everybody can pull their orders. Why would you track something that's not really real? Oh, look, guys, they're putting let's say they're putting a 30 million bid here. Do you think that's bullish? No, they just want you to think it's bullish to push it up, get short somewhere else, and then pull the bid, and then they'll just nuke it, right? They send the allocated spot, sell it, and then they capture the percentage on perps. So I think you're better off, right? That's why I'm saying keep it simple for yourself. Otherwise, it just, the more things you need to look at to execute a trade, the easier you can fuck up the trade. If a range occurs at value, do you consider that as a possible break outside of value? What I want to see for a genuine break is outside of value. Apologies for my voice, by the way, because I'm getting sick, so I can already feel it where my throat is starting to act up. But again, if you were to reset this profile real quick, now let me merge this, merge, and then let's get this where it should be. So this was that 3 week value, right? Let's expand this. For me to consider a genuine break from value, right? I need to see this, but I need to see the inverse like that, right? So if we're getting on a weekly profile, on a 30-minute chart, listen guys, I'm seeing like since the more platforms are now going to be using TPO, which is good, right? Which is good. However, please use a 30-minute rotation. Use the 30-minute time frame. I'm seeing guys talking about TPO using a 4-hour chart. Bro, don't, right? 30 minutes, okay? That's what it was intended to do. So, if you're using a higher time frame, like an hourly, H4, whatever, you are basically fucking up poor highs, single prints, everything. So it's not suited for that, right? 30 minutes, that's what you want to be using. So on a 30-minute time frame, if we're getting this time and space, but we're getting the inverse above value or below, to me, that is the indication of a genuine shift in value, right? Shift in condition, where we go from balanced towards imbalance up, balanced towards imbalance down, okay? That's what you need to see. Do you take partials, or how does your trade management works? I tend to take partials, but not one. I tend to be aggressive with my trades. So I tend to scale out 70% at my initial TP, and then I don't always set a hard TP, right? I just set an alert, and then when we trade into my TP, I'll look for, okay, are we just blasting straight through? At that point, I'm going to be using a trailing stop. So it's a bit more, can't really say within one sentence, so to say. I tend to be aggressive with my TPs though. What's the volume indicator on the bottom telling us? It's delta, man. For as far as we can see, it's anomalies within buy and sell volume. And it goes well hand in hand with the high volume bar indicator. So it's an indication of where aggressive buying or aggressive selling is entering the market for as far as we can show it on TradingView, because TradingView doesn't allow for tick data, right? So it's a calculation. But if you want to have precise data, go towards Excel charts, because, or whatever platform you want to use, but TradingView ain't it for that. What has more value right now? The 4 week. Okay. So ask the same question, but do it like this. Which has the most amount of days within the composite, within the value area? Is it the previous week or is it a 4 week? Because the value, they're both pretty recent, right? And at that point, in my opinion, a 4 week composite compared to a previous week composite, right? That's like comparing a 5-minute chart to an hourly chart, right? The hourly chart has way more weight to it, way more importance. The 5-minute chart might show you a short term. Let's say that the hourly resistance is here. However, the 5-minute chart is showing us a shift in condition, right? Sure, you can look for a potential move back into here, but we shouldn't lose sight of the hourly, right? Which is telling us this is bearish, and then, we can start trading lower. Same goes for if we're having a 4 week composite like that with the value area high, and then the value area low here. And within that 4 week composite, we have got a previous week value. So instead of having 4 weeks, we now have value from 7 days. Also important, but if we're accepting below the previous week value low, should you be like, I'm shorting this? No, right? Because the higher time frame structure is telling you this is support. So the trade that you actually want to take here is wait for the market to show you that this becomes a failed break below previous week value. Then we go long. Do we take profit at previous week value high? No. We take profit around this, right? However, the bullish confirmation is when we get that shift above. Make sense? So it's relevant, but the 4 week is more important. Do you think the bar point of control just below the 4 week point of control could be a short? No, I would just focus on the 4 week. Mowgli's asking a question: when you start trading back in the day, did you have access to trading whilst at work? I don't work at a PC, so it's tough to follow movements until 4 p.m. Perhaps you just need to focus on high volume bar trades. So no, I didn't. But I work shifts. So I had 2 weeks, right? So the first week, my shift was from 5 a.m. until 2 p.m. And that was 6 days in the week, right? Because I worked from Monday to Saturday. And then the second week was from 12 p.m. until 12 in the afternoon when I started until, 10 p.m. And sometimes again 12 p.m., right? Until it was fixed, because I was a mechanical engineer at that time. So whatever issues they had back in the day, I had to fix it. So everything was running again the next day. And I would do this like 1 week on, off. So within this week, I was able to trade after 2 p.m. because then I had home, sit behind a desk and trade. Within this week, I was able to trade until 12 p.m. I would sit here and then just trade there, right? And this is what I did for a couple of years until I moved towards trading full time. My advice would be to do a prep every day before your work. You can do these preps, like I'm doing it live on stream right now, so it took me 30 minutes. But if you're doing it for yourself, then it should take no longer than 15 minutes, to be honest, because you don't have to type everything, right? You can just set your alarms and stuff like that. So going into next week, click on here, alert, crossing up once per minute, and then create alert. And then, for example, at the 4 week value low, create, crossing down once per minute, create. And then what we want to do is, if we're trading into the level and we form a high volume bar like we do right here, it's an instant short, right? That's what we want to be trading. If we don't have a high volume bar, we're going to be waiting for that shift in structure, right? So if you're not really able to sit behind a desk and you only want to be trading high volume bars, or, if you really want to trade during your office hours, then I would suggest to just stick to the high volume bars or wait for H12 SFPs, right? So, that's the only thing that I could do. I wouldn't really have another way around it, to be honest. I would just set alerts, and then we know exactly what we're looking for, right? Like we've been discussing within the Discords last week, like either high volume bars or displacements up or down. Yeah, man, I had a job. I worked my ass off, like 70, 80 hours a week. I worked a lot, like genuinely a lot. But that helped me build a buffer to start going full time. But we can go over this more in depth, Mowgli, in the stream tomorrow or somewhere next week. But it's mainly about setting alerts and then just waiting for it to get triggered. I was saying, just ask ChatGPT to try with the prep, bro. That would be good. No, it's just like the trade that we covered here. Set an alert there and just wait for the H12. Wait for the H12 to close, and then if the H12, look, just do it as simple as this, right? We got the 4-week value area high. We've got the 4-week value area low, right? If your alarm goes off, you go towards the H12 chart and you're like, oh, I got 2 hours left before the H12 close. Set an alarm when that H12 closes, okay? If it closes as a swing failure, like that, you go into the hourly chart, you zoom in, and if the hourly chart looks like this, sweep, and we're now trading here, you mark out the close of the opposing candle, like that, and you set an alert. And then you go about your day. If this alert gets tagged and we close above, right, that's when you take the trade. You're stop below the low and you're targeting the high. This is, I think, the most simplistic approach when you're trying to combine everything. The most important thing here isn't necessarily waiting for an H12 or waiting for the structure break. The most important thing still remains knowing where you want to be looking for these. This shit happens everywhere, right? But you want to know where. And that's where, this comes into play, where we're breaking it down. So really, you should be doing these. And then, or just watch mine within Discord, whatever you're comfortable with. But I'm still a big believer of being able to do your own prep. Then every day I'm posting my prep and you can combine the two, right? You can compare them like, hey, why do you have this 3-week or why do you have that 2-day? And that gives you questions for the daily streams, right? Where we can, battle it against each other, and then I can explain it more often. Respect, I just have a rich wife. God damn. I mean, as you should. Like, I tweeted about that the other week. Like, that's the only thing that you can, that's certain in life. Family, you get, right? You can't do anything about that. But the rest, you can choose. Now choose wisely. Because it's important. So Kevin Hart's asking, why are we not using previous 12 weeks and the previous 8-week composite? Because there's a recent composite right now. And that's this current 4-week, the upcoming 4-week. Otherwise, my chart looks like this. Composite, right? I don't want to have that. The most recent development is the most important one. And, if we have it a structure like a 4-week value, then more than enough for me. Yeah, or you can just do your prep in the evening before you go to bed, Mowgli, like as long as you have like just a recent structure that you can go from. Like I can do the prep right now as well before tomorrow. So when I wake up and I know, okay, shit, we're trading here, I want to be a buyer. I don't even have to think about it, right? You can do the prep before you go to bed as well. Because nothing really will, there's not going to be a whole lot of times. Let's say that we're doing the prep right now, right? And the bias is to short this and to long that. If you wake up tomorrow and we trade up here, you're like, okay, well, thank God I didn't short this. We're now trading above. So this becomes my bullish line in the sand. You go to work, you change the alert from crossing up towards crossing down, because now you know if we do this, you want to be a buyer for a move higher, right? So you can do it the night before you go to bed as well. Like, as long as it's systematic, right? Where you can just learn and then compare and then journal what's happening. Okay. Okay. I think that's a wrap for today's stream. Any more questions? If there are no other questions, I'm going to be wrapping this up. Let me know in the chat. Let's see. Review. Let's get this back in. Right there. Okay, guys. So for the next stream, for me personally, like within Discord, I streamed the other day. I usually stream every day, but we've moved more towards every 2 days I stream. I post my preps every day, but for this week and next week, like for the public streams on YouTube, next week is probably going to be my last stream for the year. After that, I'm calling it quits because it's the holiday for my kids, so I'm going to be spending time with them. And let's be honest, like, we're not missing a whole lot here, right? It's mainly just, there were a couple of good trades, but this is just not really worth my time. So I'm going to be putting alerts at the 4-week value. If a trade sets up, I'm all game. If not, I'm happy as well, bro. Like, I couldn't give a shit, right? One more question from Kevin Hart. Thanks. Just a random question. Why do you not use pure price action? Why would I? Because there's better alternatives to that. Mainly because of my background, I think, because I'm a mechanical engineer. I want to know what's happening behind, the scenes, and order flow allows me to do that. And, let's be honest. If we're trading a range, it's always like, what's my range high? Is it this high or is it that lower high? Like, what's my range, right? What's my range high? Whilst looking at a volume profile distribution, it's really clear to me that, okay, this is resistance and that is support. I don't really have to think about, oh, is it this high or is that the structure break or what is a weekly structure doing? I don't care. I'm just looking at where is value relative to the market. And I think this helps me to determine accurate locations on where I want to be facilitating trades, right? For example, these highs there. Just helps me. I'm not saying that's wrong. I know a lot of good traders that are focusing purely on price action, right? I just like to have a bit more confluence in terms of defining my levels, and it helps me build a bias for the week ahead. That is why, okay? All right, guys. Thanks a lot for the great questions. If you enjoyed this content, if you enjoyed the stream, you can support me by following me on YouTube, liking the content, maybe leave a comment or two. And I will see you guys in the last stream of the year next week. All right? Take care, man. Peace.